In the financial world, Steve Cohen's name was once widely known. He created an astonishing wealth myth, but was also mired in the quagmire of insider trading, experiencing a huge drop from the peak to the bottom. His life is full of legendary tales. Cohen was born in Great Neck, Long Island, in 1956. Although the town was affluent, his family's economic situation was relatively poor. When he was a child, he witnessed a luxurious life in Manhattan with his grandparents. Fancy restaurants and wonderful shows made him yearn for wealth. However, life at home was simple. This sharp contrast planted the seed of his desire to get rich in his heart. His family also believed he was special. His mother would make steak for him while the other children had hot dogs. This special treatment made him firmly believe that he would achieve great things in the future. In high school, Cohen showed extraordinary talent for making money. He found that playing poker was a good way to earn extra cash, and he was extremely talented in it. He often played all night and could win thousands of dollars in one night, sometimes even more than his father's hard-earned income. Poker games not only brought him money, but also cultivated his ability to deal with probabilities and uncertainties, laying a solid foundation for his future entry into the financial market. Even though he spent a lot of time on poker, he still had excellent academic performance and was admitted to the Wharton School. During college, Cohen joined Gruntle & Company. As a newcomer, he boldly predicted stock trends with a sharp intuition developed from playing poker. His supervisor, Rono Izar, was skeptical but still gave him funds to try trading. In 1978, Cohen achieved amazing results, earning $4,000 in one day and another $4,000 overnight. He was like a magical tape reader, able to accurately judge the market trend from complex trading information. In that era when electronic trading was not yet popular, this ability made him stand out. In the mid-1980s, the U.S. stock market was in the midst of a merger and acquisition frenzy. Cohen seized the opportunity and built positions around takeovers and IPOs, easily earning $10 million annually. However, the financial market is unpredictable. On Black Monday in 1987, the stock market crashed. Gruntle & Company was on the verge of bankruptcy, and Cohen's team suffered heavy losses, with almost half of its capital gone. But Cohen didn't give up. With his tenacity and sharp market judgment, he actively traded in the chaos to recover losses and finally survive the crisis. In 1993, Cohen, who had accumulated rich experience and wealth, founded SAC Capital. He invested $10 million of his own money and raised funds from other investors to start a new journey. Cohen knew that investment required good risk management and not being influenced by emotions. With his rational investment strategy, SAC Capital developed rapidly. In just 3 years, its scale nearly quadrupled to $100 million. As the company grew, Cohen's wealth soared. He lived a luxurious life, buying mansions and collecting expensive artworks, becoming a legend on Wall Street. However, in the fierce competition of the hedge fund industry, some people took the wrong path, and insider trading emerged quietly. In 2008, Matthew Martoma, a portfolio manager at SAC Capital, placed huge bets on the stocks of 2 pharmaceutical companies, which puzzled many of his peers. It turned out that Martoma's information came from insider sources. He illegally learned in advance that the drug trial results were disappointing. SAC Capital took advantage of this to reduce its holdings and sell these 2 stocks, making a profit of $276 million. In 2014, Martoma was convicted of insider trading, and Cohen was accused by the U.S. Securities and Exchange Commission (SEC) for ineffective supervision. In 2016, Cohen reached a settlement with the regulators and was banned from managing external funds. SAC Capital was forced to close and transformed into a family office. Point 72. The once glorious financial empire collapsed in an instant, and Cohen fell from the heights to the bottom. After the transformation, Point 72 tried to make a comeback by investing in other hedge funds. The investment in Melvin Capital achieved good returns in 2020, but it didn't last long. In January 2021, the GameStop stock triggered a financial storm. A large number of stocks were sold, leading to a short squeeze. Melvin Capital lost as much as 53% of its investments. Cohen and Citadel jointly invested $2.75 billion to rescue it, but both hedge funds still suffered heavy losses, and Point72 lost its former edge. In recent years, Cohen has expanded his investment scope into venture capital and other fields. However, under strict regulation and public suspicion, he has gradually withdrawn from the active trading front. Steve Cohen's story is about dreams, success, greed, and failure. He created a wealth myth with his wisdom and hard work, but ruined his reputation and career due to momentary greed. It warns people that on the road to pursuing wealth, one must adhere to moral and legal boundaries. Otherwise, even the most glorious achievements may disappear in an instant